There are very few hard and fast rules out there in the real estate and investing game, but one of the ones that I kind of feel might be one of them is around adjustable rate mortgages. Uh, I know rates are high today. I know adjustable rate mortgages offer lots of options, 3, 4, 5 years, whatever that happens to be. So I thought we should talk to Casey from Brick by Brick and see if it ever makes sense to get an adjustable rate mortgage. How you doing, Casey?
I am doing good, Michael. So glad to have you back. It feels like it's been a long time. So
It's been almost a month. So yes, it has been quite a while. We have rates. Let's just call them 8% here, seemingly a couple of weeks ago. Really hurt demand. Demand fell off a cliff. Days on market up, inventory or months of inventory up, which really are demand driven. I'm curious, what do you think about using adjustable rate mortgages as either an investor or homeowner in a high rate environment? What do you think?
I think it's scary, really for either party. Back in the last real recession we had, people were using all sorts of things like that, adjustable rate mortgages, and it got people in trouble. It's not guaranteed. It's if you think you're going to be holding your property for a long time, just get the regular higher rate now and refinance later, when rates go down. Nothing is guaranteed. What if rates go up? What if we get to 10% rates? Can you hold that? Can you afford that? Are you putting yourself, your family in financial stress and in jeopardy of foreclosing or having to do a short sale or ruining your credit and putting yourself back, 10 more years? I feel like right now, with the low inventory and the high interest rates, people are kind of grasping at straws and doing whatever they can do to try and get a deal to work, to get a deal to work. Sometimes
Yeah.
there's just not a deal right now, just keep looking, dig harder, do more things. There are deals out there, they're just not as easy to find. So don't try and make something work with a bad loan product that might get you in trouble. Now, if you're like, hey, I've got other plans for this property. I don't really plan on holding it for very long, or maybe I'm gonna do a, what my neighbor called a long flip,
Mhm.
which is you live in it and fix it up for a couple years and then sell it. Flip. It's an interesting concept. But if you're going to sell it, I guess, if you're going to increase equity enough. But for me, I would never take on personally an adjustable rate mortgage.
Yeah, I didn't know where this was going to go, but I totally agree. I mean, one of the scariest days of my investing career is when I had a commercial property. So this wasn't a single family home. This was an apartment building. The 5-year term came up at the wrong time. And thankfully we were able to negotiate with the note holder and extend the term 5 more years. But they didn't have to. They didn't have to. They could have forced us to sell. We probably would have sold because there was a little bit of equity left, but we would have lost some money. And it was timing. So yes, I know there's a lot of people out there talking about rates coming down, but let's be crystal clear, right? If you're coming into buying a home with 3% down and rates come down, let's say rates come down a point and a half, you probably can't refi because you have no equity, right? There's no equity there. And yeah, so this whole buy the house, date the rape thing, marry the house, date or whatever it is, that just annoys me. I think I think for most people buying a home or investing, it's arms are the wrong idea. Now,
Yeah.
if you are coming into a situation where you will unequivocally, without question, be out of the house in 2 years or less, getting a 5-year arm, fine. If you're willing to make that bet, that's on you. I could see that making sense. I do want to talk about one flavor of what some people call adjustable rate loans, which I do not see as adjustable rates. It's something that often I hear is called a 2-1 buy down.
Hmm.
So what a 2-1 buy down is essentially let's use 8%, 7%, and 6%, right? You're going to
Yeah.
get approved for the loan at 8%. What's going to happen at the close of escrow is the seller, at least this is how I would negotiate it. The seller is going to pay for your 2-1 buy down, which is going to escrow a bunch of money in an escrow account. And then what will happen in year one is you, the now owner of that note. You will be paying the 6% of that note, and the other 2% will come out of escrow. And then when month 13 or year 2 starts, you will pay the 7% interest, and the escrow will pay the other 1%. So to me, that is a fixed rate product where you're having somebody else pay some of the interest. I don't mind those. I think a 2-1 buy down, as long as the rate is fixed in this example at 8% for the next 28, I have no problem, especially if the seller is kicking in the amount that ends up in the escrow account. What do you think of that?
I think people are not understanding what a 2-1 buy down is.
Yeah, I
I
agree.
think they're thinking that they're buying their rate down forever. That's what I think. All you're getting is 2 years. Like, big whoop. What about the rest of the, like, if you can't afford it at 8%, what are you doing with this 2-1 buy down for 6 and 7%? Like, really, what good is that? I mean, okay, you're putting a little bit extra cash in your pocket. Why don't you ask for legitimate money towards buying your rate down, like, for the whole term? Why would you just take the chunk for the short, 2 years? And I've talked to a few people who have messaged me on Instagram asking about the 2-1 buy down, and they think that it's the 2-1 buy down means like for all time, like they're buying their rate down. So I think people aren't really understanding what they're actually getting with that. I don't think it's being explained properly, honestly.
Yeah, there's something called, let's just try to, again, neither you or I are mortgage brokers, but you and I are consumers of mortgages. We can say that. So you can pay 2 points, and that, let's just try to put some numbers on this. It's a $200,000 loan. 2 points is $4,000, right? 2% times 200 equals $4,000. That $4,000 typically can be used for lots of things on the closing statement. You could use it as a rate buy down. Maybe in your situation with your credit, talk to your mortgage broker, that $4,000 could buy you a 0.5 point off. So instead of 8%, it'll be 7.5, but it'll be 7.5 fixed for 30 years, right? So that's a 2 points versus a 2-1 buy down. And again, I've had many people call a 2-1 buy down an ARM. Some people have called it illegal. It's neither of those things. It's just you're paying a little bit less. Yeah, you're paying a little bit less month year 1, and a little bit less and less in year 2. So it is a fixed rate product, however, in my opinion.
Yeah, it is, but it's not very exciting. It's like
No.
whoop. Big whoop. I get a little bit of money off my mortgage for the next 2 years. What about the rest? So
Yeah,
I
exactly.
would rather, and depending upon, I'm sure it's helpful. Let's say you're like, okay, well, this 2-1 buy down is going to help us. And then I'm sure rates are going to go down and we'll just refinance then. Okay, but you're still guessing. We all
You're
still
guessing.
don't know.
Yeah,
Rates
at
could
least
go up.
you know the worst upside. At least you're capped at an 8% in that story.
Exactly.
It's not
At
a
least.
true ARM where it could go to
No.
10.
It's
Yeah.
not an ARM at all, really. You're just
It's
getting the
not an ARM.
discount the first 2 years, and then it's back to normal for the rest. So just everyone that's doing that know that it's 28 years of the higher rate, and can you swing that? Don't bank on rates going down in a couple of years. No, I can qualify for the 8% interest, the mortgage payment on the 8% interest rate, but 6% is much better. And I'm going to do this 2-1 buy down, and we're going to buy this expensive house, and rates will go down. We'll refinance. Maybe.
I'll bet on that. Yeah.
Just don't get yourself in trouble. Make sure you can afford worst case scenario.
I totally agree with that. Run it at the highest number. That 2-1 buy down, it's 8%. Not a fan of ARMs. I mean, the only corner case is that person who's going to be there for a couple of years. I guess the other corner case, because I've had this conversation so much, let's just assume you are somebody that's wealthy or of means, and worst comes to worst, you can write a check to pay off the mortgage. Okay, fine.
Yeah.
Whatever, right? These are such corner cases, but I see them all the time in the comments. For most people, most of the time, in my opinion, ARMs are too risky.
Yeah.
Simply.
I would say if I had to pick an ARM product, the longer the better. So for me, like a 5-1 ARM, a 5-year ARM is not good, because I mean, anything could happen. 5 years is so fast. If we get the market crashes, homes prices, like your price probably might not be back up in 5 years, but in 10 years, pretty good chance it will have come back up. Even with the worst market crash, chances are your property value is back up and you'll be fine. You'll be able to sell or get a new mortgage. But people forget There's more to, you know, having a higher rate or whatever. If you do a 5-1 arm, if your property is not worth what you purchased for it, you're not going to get a new loan. No one's
Yeah,
going to refinance you, you know?
totally agree.
So your option's going to be to take the higher interest rate, you know, or sell your property, but you might be selling it at a loss. So you got to
Eh,
think of all scenarios. So the longer the arm, the better. So 10-1 arms, better deal. I'd
Agreed.
rather do that if I had to choose. Um, that probably, and they're hard to find. Like I feel like there's 5-1s and 7s are much more common than a 10.
They are. Absolutely. Casey, you put out a lot of amazing stuff. Thank you for stepping up, folks. Weren't you guys so excited that Casey interviewed with Anna and Dion and Coach Carson? Thank you for doing those while I was gone. It was greatly appreciated. Where can people find you?
People can find me every day on Instagram at Brick by Brick Wealth, and it's in the works. YouTube channel's coming back, so make sure to subscribe.
There
Good
you
stuff
go.
for 2024.
Thank you so much.